Vincenzo's Go Crypto Investing this August the 16th, 2025. Early cryptocurrency, blockchain technology, gold, and silver bullion update as we strive to become asset millionaires via gold and silver bullion and mining stocks, cryptocurrencies, 401k steady investing, real estate, cash on the side for peace of mind, emergencies such as fixing your roof, a water heater goes out, car repairs or medical bills, earning 3 to 5% in CDs or bonds. And also that is for accumulating new or buying into an existing asset, and you have to have cash, free cash to do that. Also, we build truth, trust, education, and information. And you can see the Ethereum price is up 2.9% today, or 7% in the past week. It's up 34% in the last month, and 79% in the last 3 months, 71% in the last 6 months, 70% in the last year, and 12x over the last 5 years. And part of what we were talking about yesterday is what I believe is the big manipulated, not talked about, orchestrated criminally what's actually going on by the market manipulators and the hedge funds, the governments, the corporate entities that are doing it. I believe they're trying to buy up all the Bitcoin and Ethereum into the ETFs so that they own it all, and that you can only get exposure to it by buying into a fund and paying an asset management fee to them, instead of buying your own in the open market and owning your own Bitcoin and having virtually no cost to own it, right? And actually owning it instead of just having exposure. That's what I think is going on. And that's why these ETFs are being rushed out now. And I think over the last 2 years, the big flip took place with the government. Not only because Trump's in there, I think it was all manipulated to be this way because they need these hedge funds and owners of these ETFs, BlackRocks of the world, to buy up all the Bitcoin. And as of right now, as of August 13th, 2025, U.S. spot Bitcoin ETFs held approximately 1.296 million Bitcoin, which represents 6.5% of the circulating supply. And they're eating it up fast, right? Another big chunk is held by essentially an ETF, like a micro strategy, when these big companies are doing it, because then you buy into their essentially fund now that they're charging management fees. More broadly, ETFs, including both spot and futures across global funds, account for 7.12% of total Bitcoin supply, roughly 1.496 million Bitcoin. These figures suggest ETF now control a significant slice of the accessible Bitcoin market, enough to influence price dramatically while still under 10% overall. And I think over the next 5 years, you're going to see that go from 7.12%. I think it'll be near 50% within 5 years. And we're going to be tracking this because that's very important, that they're trying to take control of something that you were supposed to have ownership of, right? They don't want you to own it. That's the whole thing. They want to own it. They want you to rent it from them. ETF. Combined holdings for corporate treasuries and spot ETF now exceeds 8.3% of the total Ethereum supply, up from about 3% earlier this year. It's up over 120% in less than a year on what they've picked up, and they're accelerating their purchase. Another source estimated Ethereum spot ETF alone held approximately 4.19% of the total market, right? So that's very interesting, and I think this is only going to accelerate. Institutional overlap. About 92% of the asset in ETH ETF are held by firms that also invest in Bitcoin ETFs, although only 24% of Bitcoin ETF investors held Ethereum ETF. This suggests institutional base driving ETF exposure, while Bitcoin ETFs enjoy broader institutional adoption. I think that's going to be very interesting, and I'm forecasting. I think eventually they're going to own it all, right? But you can see it when it's already almost doubled, tripled in 1 year what they own in Ethereum, and obviously the price because of their buying is skyrocketed. And the Ethereum price this weekend, we were seeing it because it's in a consolidation form. Was it going to come back all the way down and back test to $4,000, then breach its all-time high? That is a very bullish consolidation, and that's still what we're watching to see if that happens. And that's very plausible that could happen. You can see the 50-day moving average is vastly approaching the neckline support. The 200-day moving average now is almost at the mid part of this green support and resistance box. And the 200-day moving average is getting close to the bottom part of that support and resistance box, right? That the bottom part, get off there, is sitting down here at $3,044. And the top part is at $34.93. So a bullish consolidation would be there in green. That would retaliate a nice bounce back up to the 48.33. If it did come down to the 4,000 and slipped it, that's when you would look at the moving averages, but we're not even talking about that. Right now, we're talking about where you're at any kind of move to the downside, you would just be confirming the former megaphone resistance as a megaphone major support. Obviously, as long as we're above this megaphone neckline, you have a technical target of $10,323. If we look at the XLM, you know where we're at here. Right now, we're just below the 43 cents, and the 43 cents is what's going to dictate if you're bearish or bullish in the short term. And as long as you're below that, the price is going to want to come to the downside, first initially coming down to the 50-day moving average, then coming down to the top part of this green trading box, right where the 100-day moving average is, on a local regional double bottom that you hit back here on August the 1st through August the 3rd. And that's what would happen on the downside, right? If it stays below this 43 cents, right? In the short term, meaning this week. But if you want to get bullish and not have that happen, you just got to get back on top of this 43 cents. And then you can flip this back to bullish and try to make a run at this 51 cent regional high and this major upper resistance at 55 cents in the short term, right? That's what we're looking at with the XLM. The XRP is in the exact same thing. Everything's the price action's the same. The moving averages are very similar. Everything's just at a different price level. Let's just update these moving averages. You can see the 200-day now is almost getting to that major 255. And you can see if we bring our industry exclusive pointer tool, XRP is sitting just above the 307, which is its major support level. And right now, as long as you're above that, it'll try to attack this 366 like it did here. And that's what we're seeing if it can hold it. If you, for any reason, slip below that 307, you're going to start to play the moving averages again and come back to a regional low of 273, right? But right now, you're above the moving averages, so you're short-term bullish. But if you slip below this 307, that's when you would look at the 277 to the 255. As long as you're above this, you're going to want to attack the 366 in the short term. But remember, we're just talking about the short term over the next 5 years. That's when you really are going to want to have this stuff. And you're not going to want to let the corporate hedge funds own it all. So remember, you accumulate the dips and you ride the wave. And when you meet a certain expectation and profit, it is okay to take some of your profit on the way up. After you've made 5 or 10 or 20 or 50 or 1,000x, you don't have to hold it all and never sell, because if you never sell any of it to purchase something, you can never utilize some of the rewards, like taking some profits and buying a house, or taking some profits and buying a car, or taking some profits and fixing your house, right? Those are all things that you are allowed to do and don't feel guilty about doing it. But that's what's going on in the short term in the XRP. We're going to talk in tonight's video about macro timeframes, long term, 2026 to 2030, what I think is going to happen in the gold market, what I think is going to happen in the crypto market, what I think is going to happen, most importantly, if you're in the United States with the US dollar. And that's going to have a very, very big influence on why we're doing the things that we're doing. And I think it's very important that you guys understand that. And that's why we're going to be educating and giving you the information that you need on it. And we're going to really dive into it tonight. Update. You can see the Bitcoin price is still above the 50-day moving average, still above the 3.5-year within the rising channel pattern that we've been in. If you keep holding it, if you consolidate to the downside, what I'm trying to tell you is you're going to want to come down to the 114, the 50-day, and then the pattern support, which is just along essentially the 100-day moving average at 110,000. If you can keep above that and you can keep pushing up, like you briefly made a new all-time high last week, which means we have to move this to where the new all-time high was at 124,640. You do know, as long as you're within this pattern, the technical target is 144 to 155,000, right? And that's what we're paying attention for over the coming weeks, to see if this bull trend with all the institutional momentum and buying is just too much, and we have to hit that 155 before any kind of substantial correction. Like the channel, subscribe. Peace and love to my beautiful audience. The Rex Eyebrow, Jay.